My next guest was on the bullish side last year in the face of widespread recession concerns, remains upbeat now on the economy. And he says the job gains are being driven by three sectors in particular: healthcare, leisure and hospitality, and state and local government. They generated an average of 132,000 jobs per month, compared with just 33K for other sectors. And he says these three sectors remain understaffed and will continue to hire robustly. Dean Maki is here. He's chief economist at Point72 Asset Management. Dean, it's good to see you. How much longer do you think that they need to go to fully staff up?
Hi, Kelly. I think these sectors have a long ways to go. If we look at healthcare, for example, it's grown a little more than half as fast post-COVID as it had pre-COVID. And healthcare should be growing in size given the aging of the population. So we think that sector is going to be adding significantly in coming years. In addition, leisure and hospitality, state and local government are actually at or below pre-COVID levels of employment. So it's no mistake that these three sectors are hiring aggressively right now, and all indications are that they are actually understaffed still and will be hiring robustly throughout this year.
What would you compare this cycle with, Dean? Does it have any precursors?
I think that what we're seeing here is the long lag still from the pandemic. And we haven't really experienced anything like this in our working lifetimes. And I think that's why many people are looking at this as they're somehow acyclical sectors. But these sectors, I think, are the most cyclical sectors coming out of the pandemic. And that's why I think they will be powering job growth going forward.
Steve, I just want to bring you in on that note. What do you think?
Well, I will say that the fact that job growth is so concentrated is one of the items in the list of those who think that the job market is weakening, that it is not more broad-based, essentially. That's something that we keep hearing a lot of from different folks, that it's just these sectors. I do think there is more to go. I will say that in my talk with the BLS economists, I asked them, well, why don't you just X out the effects of the pandemic? And they said, well, can you guarantee to me that the job market is going back to the way it was before the pandemic? I think what Dean is saying is smart, and it makes sense. When I look at, for example, having reached the level of the pandemic in employment, well, that doesn't take account for the growth that's happened to the economy. No doubt we need more healthcare people in all aspects of the healthcare. No doubt we need more in education. But there's just also no guarantee that we're going back to the economy we had previously. And so you've got to make room for changes in the economy that are going to be lasting from the pandemic.
And Dean, if I could jump in and kind of make this a question to you, it would be about the traditionally more cyclical sectors like manufacturing, where we've seen those negative ISMs. How does that piece into all of this?
Well, certainly manufacturing job growth has slowed down. And in a sense, that's what the Fed rate hikes were trying to accomplish, was to slow down the cyclical sectors to some extent. And really what that's accomplished is we've gone from job growth of 700,000 per month down to about 165,000 per month. And that's a lot more sustainable. That's what we've seen over the last 3 months. The unemployment rate is still sitting down at 3.7%. So it's not as though this slowdown in job growth has caused the unemployment rate to shoot upwards as many people had feared. Rather, this is allowing the unemployment rate to stabilize at a very low level.
Are we going to look back, Dean, and say, well, as I remember from past cycles, the three sectors you're citing for job growth are often the last place that a downturn shows up. Is there just a lag effect here?
I don't think so. And I think that's what is different about this cycle. It is the pandemic cycle. These sectors are still very depressed relative to pre-pandemic readings, and I don't think they need to be as depressed as they are. Healthcare, leisure, and hospitality, those should be growing along with the economy. And so I think that these sectors have had trouble staffing up, and most firms in these sectors are understaffed. For example, that's what we're seeing strikes in the healthcare sector about, is understaffing and overwork of their employees.
Right.
So I think there is still a lot of hiring left to do.